Good morning and welcome to the Killik & Co market update. This week, the latest inflation figures for the UK were published, and the headline rate came in quite a bit higher than expected at 3%. Here's the 10-year chart. The rate briefly dropped below 2% last autumn, but has been on the up since then. One of the reasons given for the higher reading was the increase in private school fees, which have gone up significantly because they are no longer exempt from VAT. As a reminder, VAT was applied to private school fees from the 1st of January this year. But even before that happened, private school fees were rising above the rate of inflation. Here's how the average fees grew between 2019 and 2024, before that VAT rise came in. Fees in 2024 were 8% higher than fees in 2023. Looking ahead, there are more inflationary pressures coming down the tracks. In one of our recent videos, we mentioned that water bills this year will be rising by an average of 26%. And this week it has been confirmed that 85% of councils in the UK will be raising council tax by the maximum 4.9% that's allowed without having to go through a referendum. Here's how council tax for Band D properties has risen over the last decade. Band D is referred to as standard council tax, and all the other bands are calculated as a proportion of Band D. The inflationary pressures in the UK mean that interest rates may have to remain higher for longer, and that will be bad news for economic growth. And next, I wanted to talk about a change to the constituents of the FTSE 100 index. This actually happened a couple of weeks ago, but we didn't have space in that week's video. The FTSE 100 contains the 100 largest companies on the London Stock Exchange. Earlier this year, a constituent called DS Smith, a paper company, was acquired by an overseas buyer, and that left a space in the FTSE, and the next biggest company, the Polar Capital Technology Trust, was promoted to fill the gap. The Polar Capital Technology Trust, as the name suggests, is an investment trust investing in technology companies. Most of these technology companies are American. This chart shows the relative performance of the trust in comparison to the FTSE 100 over the last decade, including dividends. £100 invested in the FTSE would now be worth around £180, whereas £100 invested in the trust would be worth over £630. Here are the top 10 constituents of the trust, the top 3 being Nvidia, Meta and Microsoft. This trust is covered by our research team, so do give us a call if you'd like more information. And lastly, we've been looking at diamond prices this week following an announcement from De Beers owner Anglo American saying it has written down the value of the De Beers business by $2.9 billion. Anglo American is in the middle of a fairly major transformation. The company successfully fended off a bid from BHP last year, and it's now making major changes to its business to make itself more profitable. Anglo American had already previously written down the value of De Beers once. The reason is the decline in diamond prices. Here's how prices have moved over the last decade. You can see they've plummeted since 2021, largely due to competition from lab-grown diamonds. So this is a great example of how a new technology can have a huge impact on an old industry. Moving on to have a look at the calendar for next week, the market will be very focused on results from Nvidia, and we've also got results out from Salesforce and TJX. That's it from us. Have a great weekend, and we'll see you next Friday.